It is important to note that as a CFO in a large government organisation, my focus is actually on better learning outcomes and better employment opportunities for Queensland students and for graduates. That's what my job is. My job is to get the best return on investment on the resources that we have to deliver those services, to get the most efficient and effective use of those resources, and therefore what is so important is a really strong, working, appropriate control framework. A couple key things, I suppose. It is a very big department. We have 1,300 locations, but most importantly we have 1,233 schools. They are all individual entities from the perspective of they all have their own bank accounts. They all use one finance system, thankfully, but they all use individual bank accounts. But they are just part of the department. They're like units or divisions or whatever of the department from the point of view of the financial statements. So it is highly complex to pull together that many entities and have a control framework in place that works for so many entities at the coalface, I guess. Big thing, I suppose, we have two. Sorry, I should have pointed out we have two financial systems that we use. We use SAP ERP6 for corporate and TAFEs, and we use the One School or Grasso finance system for schools. But both systems talk to each other, and the ERP6 is the overarching system which the financial statements are produced out of. I'll get the button right, hopefully. Early childhood, given I'm being recorded, I better make an announcement in terms of some of the things that we do in that space. That is basically a fully outsourced service delivery model in Queensland, unlike other states. And the good news, I suppose, in terms of an outcome from a good control framework is that our kindy participation rates in Queensland have gone up from 28% in 2009 right up to 97.4% in 2013. So what we've now got is a really great step into the state schooling system where it really matters. So I thought I'd better mention that because in that sector is where we've got so much change going on now, and that's really important in terms of our control framework moving forward, because we are moving much more to a state of, I suppose, empowerment of our service providers, our schools, giving them greater control over their resources, but also greater accountability for the delivery of the outcomes they've got to deliver. And as a CFO in an agency that's already quite decentralised, further decentralisation or further empowerment at the local level is a real challenge and something that we're working through now to manage. Again, you'll see there we've got 39,000 buildings as well, and they are complex assets and componentised, so it's even more complex in terms of the numbers and the components of the assets. So it is a very, very big entity. I'm sorry, I can't do that on both sides. We actually implemented the COSO framework from July 2010, so for the 10-11 financial year. And our framework since then has been based on that framework. Definitely continuous improvement has been a focus over the years, and again I'll show where we're making some further improvements just down at the bottom of that slide now. But we determined as a result of the implementation of the FA Act in 2009 that we did need an overarching strategy, an overarching framework that worked better and better described and was better understood as to why we were actually, why we had the control framework in place and how it worked. And the COSO framework was the one we identified, one that was best practice and is now definitely supported by government. So we're happy we chose that one, which of course is the major one, but we made a good guess. Can't put a slide up without saying that we didn't get any high-risk issues in our management report from QAO, so that's just a bit of a plug basically. The improvements that we're making to our control framework, and I don't have Karen's slide exactly to go back to, but certainly, I'll probably do if I wanted to, but that slide in terms of the items that were listed there, basically DETE already has adopted most or almost all of those dot points that she had listed down. So we are focusing, however, on greater early engagement with our Director-General. We had a change of Director-General about just under a year ago now. It is a different operating environment. It is a very much more focused on empowerment, very more focused on outcomes and delivery in the department. And so from the point of view of control framework, he's also got very great expectations about how the control framework will work in our department. I suppose some of the things that we've been working on over the years are to improve efficiency of resources, but also the effectiveness of resources is the use of e-perform. So most of you will know that our department uses a smart form for our general purpose expenditure vouchers. They're linked directly to our financial delegation framework within our SAP system. So basically, and we have a single sign-on system into our SAP system as well. So basically, a person exercises their delegations just automatically, I suppose, and are right through from a system perspective. There's no hard copy signatures that no one can read or anything like that in our department. The other thing we've also had for a very long time is the shopping cart facility implemented through our SAP system, so that again we have a workflow solution including the approvals right through, which significantly cuts risk. This year we have implemented a fraud and corruption control committee, last financial year we implemented a fraud and corruption control committee, bringing together a full framework and re-pushing the message of zero tolerance on fraud and corruption within the department. And so there's been a significant amount of work in that space. Control self-assessment we have been using with our schools for some time. What control self-assessment does is it's effectively a tool that schools use to self-determine whether it's an electronic e-form type thing, but it's basically so they can determine whether their controls are right. They normally do it before the school auditors go out and audit them. But what it does do is it's a value-adding process of actually saying, okay, if this control isn't working or I've got some gaps here, then this is the legislation or the policy behind it. This is some better practice, and this is what I've got to do. And of course, follow up with their supervisors as well. We've basically, from the point of view of managing 1,233 schools, I don't have enough finance officers and there aren't enough auditors to just go out and talk to every school every day sort of thing, or even every year. So we have to rely on them wanting to use the control frameworks, actually seeing a value from the control framework. And a big part of that is putting tools in place for the control framework that actually, I suppose, attracts them or pulls them to the framework rather than us pushing the framework down. Otherwise, it just doesn't work. And I guess while it's it's no necessary evidence that the framework is working, we have a very low level of, I suppose, fraud and corruption at a school level, much lower than one would expect. This year, this department's normally quite isolated from machinery of government changes. Unfortunately, we're not this year, and the department's undertaking significant reform in the skills and training area, and the TAFEs are moving from us from an operational perspective from the 1st of July, and the TAFE assets are moving to a separate statutory body from the 1st of July as well. So that's about $2 billion worth of assets, and about 4,000 staff are moving from the department from the 1st of July. As a clever CFO, we made it 1st of July, not 30th of June, so it's next year's financial statements. From the perspective of on a monthly basis, I want to just focus on our monthly reporting process. That is the key financial accounting mechanism in the department, as it should be in most. And you know, a lot of departments might say, or a lot of people might say, that we produce a monthly report, it goes up through the chain somewhere and you don't see anything out of it. In our department, we actually do 2 reports. Because we're such a big department, we sort of acknowledge that there is a limit to timeframes and technical capability to actually produce a report. So our main report, the 50-odd page one, is produced by day 10, and immediately the next executive management board meeting after that, it's presented. But on the third working day, third working day, we produce what we call a monthly flash report, which is just a 2-pager that goes to the executive management board, and it has the key, the operating position for the end of the month, and the key stats of different divisions of the department, and the key reasons for, or the key issues that are causing variations in the year-to-date position. It doesn't contain forecasts, that's in the monthly report, but it does at least give the executive management board immediate opportunity to try to change the path of the big ship if we need to. So when the main monthly report does get to the Executive Management Board, it is I suppose, treated very seriously. So we actually make, there's key accountabilities basically from the Director-General around the room about the variances that are in the report. I get heavily questioned. I also heavily question the Executive Management Board members, the others, about variances in their areas. And then we generally will make a decision if we need to actually change allocations within the department or investigate what we can do to improve performance or better use the resources that we've got. I suppose as a result of the report, one of the main things that we have is that the vast majority of our deferrals are actually identified and processed in the February Tri-Data update, so that the department by 30th of post that period, the department is basically just counting down to 30th of June. So that means that we have to have a very robust monthly reporting process to be able to do that. And I suppose that's probably the key, one of the key issues with our success from a financial perspective. We also issue our budgets very early in the financial year, so we're basically ready for the next financial year in May. Basically, the Executive Management Board's normally signed it off in May. It is allocated to the Executive Management Board on a hold until budget day type approach. On the afternoon of budget day, or sometimes the next morning, the budget is allocated for the SAP profiling processes, and by the 1st of July, that's assuming a early June budget day, on the by the 1st of July, the budget's fully in the SAP system, and away we go. It is a very important point that our service providers, schools, actually account on, even though they consolidate into us on a financial year basis, they actually account on a calendar year basis, so they don't care about state budget days whatsoever. But from our perspective, it means that resources are being used from day one and plans are already in place well before. Just touch on our long-term strategic financial plan, which is published on our website. It's really important. This department will invest $100 billion over the next 10 years. That's no small amount of money. We have to have very key, very sure plans, very well thought out, but very well strategised plans that link to the department's strategic plan, are actually enabled to support the delivery of the department's strategic plan. No point putting targets like 97.4% achievement in early childhood if you don't actually have your finances targeted towards that in a longer term basis. Contingent asset and liabilities from an accounting sense aren't too much of a big issue for our department, but we do focus on some of the contingent issues, such as I suppose what the Executive Management Board would be interested in, which is basically any legal court cases or anything like that. And we often have student injuries and the like, so those are the types that are focused on. And the monthly report does contain a significant open and honest section about about emerging issues. Our report is I suppose it's safe to say it is a warts and all report. It is provided as is to Queensland Audit Office and Queensland Treasury and Trade on a monthly basis. And and our low-level cash flow budget profiles or allocations by cost centre are provided to Queensland Treasury at the start of a financial year, so that we have clear expectations every month. The recommendations were that commencing in 2014, we should target a soft close earlier. We are targeting a soft close for the end of this month, so it's all fun and games at the moment. What we mean by a soft close is basically a trial run of all statements and a trial balance of material items. So salaries make up 70% of our budget, so obviously we'll be focusing on those and our assets. 12-13 statement figures in the statements, 13-14 material items extrapolated to 30th of June position, and as a best efforts on the financial statement notes. Obviously, with the FRRs coming out a little bit later, that might not be the best effort this year, but obviously with a commitment to make them earlier from following years, we'll be able to work with that as well. So we are looking at having a an earlier set. So we targeted soft close a couple months later last year. So this is a bit of a stretch target for us, but we think it's vital. With the robustness of our monthly reporting processes, we believe that that puts us and QIO in a good position to understand the state of the agency. I'm not quite sure, I'll be honest, as a CFO, I'm not quite sure whether we can ever get to a full hard close as described by Karen there. I think for us, the best opportunity for us is to have a very good balance of between a very good soft close, I suppose, is probably the best we're ever going to be able to get, just based on our actual operations and diversity. And I suppose I should point out that DETE is in terms of capability and professional development, DETE is a member of the CPA Recognised Employer Program. We were the second in the country, thanks to the efforts of the ex-principal advisor from my office. And we have a very strong focus on the professional development of our staff. Now, I've said supporting the IAG there as well, but we do support our staff throughout the year continuously. My branch is one of the few in the department that actually fully or over-expends its professional development budget. It is tough, but we do things like putting CPAs through the program. We put chartered accountants through the PY as well. So we do actually have a very strong commitment to staff, not just in my branch, but in schools as well. From a long-term strategies, our valuations have been brought forward to March 2014 in line with the letter. We have a little bit of an asterisk on that now because of the TAFE MOG, so obviously the TAFE assets are outside of that. They would have been included in that had the MOG not been happening. So in summary, we certainly have a no surprises environment. Nothing I've said is what you'd call rocket science, I suppose. But it really is important. The monthly reporting framework and the partnering with QAO are really important to us, and focusing on continuous improvement. That is a control framework that the department sees a value out of. I can't stress that enough, I suppose.